Hello traders, welcome back to the YouTube channel. Today I'm going to go over the monthly Q&A. I was going to continue doing this on the second channel. If you guys haven't seen that, check it out in the description. I have kind of abandoned it, but I was planning on doing a monthly Q&A over on there, but I thought most of the people that are going to watch that channel anyway view this channel, so we're just going to post it on here instead. So I asked for questions on my Instagram, which is on the screen there. You guys can go and check it out and maybe ask some questions for the next one. But without further ado, let's get into the Q&A questions. Question number 1. In your opinion, what is the most important element of trading psychology and why? Well, this is an interesting one because firstly, people get their psychology wrong. They try and find the holy grail of Forex strategies, try and develop one strategy which is going to, win all the time. And if it doesn't win all the time, they don't give it enough of a chance to see that you don't need a 100% win rate to actually be profitable. So based on the psychology aspect of it, I'd say managing the emotions. So more of like trade management. It's all good, okay, if you've got fear of entering, that's quite easy to get over if you just have your own trading plan. If these 4 or 5 criteria are actually present from your trading plan when you're actually looking to enter the trade, that is when you would enter the trade. So that kind of gets over the fear of entering aspect of it, which a lot of people actually suffer from, especially on a losing streak. So you might have a 70% win rate, but you could lose 5, 6 in a row. Would you still enter that 7th trade? A lot of people wouldn't. They wouldn't want to then lose again and then it'd be in even more drawdown. So I'd say managing the trade, because when you're managing a trade, that's going to be the end result. So you're either going to be in profit or you're going to be in a loss. Are you going to hold to your final target? Are you going to close early? If you close early consistently, let's say you're only losing 0.5 R per setup, that you're actually closing early, over 10 trades, 10 winners that you're losing at 0.5 R, that totals around 5 R. If you're risking 1%, that's 5% missed. On like a larger FTMO account, let's say a 200k FTMO account, that's around $10,000, which you've actually just missed out on from those 10 trades. But it doesn't seem like much because it's only 0.5 R at a time. So I'd say get better and improve managing yourself during the trades. Only close out early if you have that certain criteria happen where the trade is no longer valid, because you have your stop loss there for a reason, you have your take profit set, let's say here for a reason, your stop loss is here. If price is in profit, why would you want to close out early? Just because the profit's there? Or is it because you don't want to have it come back down to your stop loss? So I definitely say managing your trade is one of the most important things you can actually master. Next question, how many pairs do you recommend to focus on? And this kind of depends on the trader. There are a lot of traders that make a lot of profit from trading, 5, 6 pairs. But from my own personal testing, I back test quite regularly. I have a mentorship group, which, you can see the development of pretty much all the traders that are in there, the ones that obviously post in the Discord group. And what I've seen is the traders that stick to 1 or 2 pairs overall seem to make the most development in their actual trading. If you have those 5 or 6 pairs, I know some people trade up to like 10 pairs. How are you going to know? Unless you have all the charts open at one time. Like if you have a setup like mine where you have like the 4 screens and you can pretty much have all the charts up at once. But if you don't, how are you going to manage all those different trades? And let's say they all set up. Let's say every single pair that you have, all 10, present an entry. They all fit your plan. Which ones are you going to take? You're going to take all 10? Are you going to take 5 of them? What if those 5 lose and the 5 you didn't take win? So you've got to think, okay, if I simplify it, 1 or 2 pairs only, you master those pairs, okay, when I trade this pair at this time with this strategy, it works 70% of the time, let's say. Like myself with gold, that's why I traded it for like 2-3 years now, solely gold. And then, I think I'm up like 64% on gold this year. That's in the gold group alone. But then I've also added in GBP USD because a lot of the times I like to trade London session. So London session I trade GU, New York session I trade gold. And obviously you're going to get instances where your setups obviously align with each other. So you can still be in that GU trade and then have a gold setup, but that's fine because you're only in 2 positions. It's easy to manage 2 positions compared to 10 positions or 5 positions. So I'd say 1 to 2 pairs. Myself, 1 Forex pair, and obviously you can do it in any way you want, but that is just how I personally do my trading. Which is better, risk to reward or win rate? And this one is very interesting because the misconception is a lot of new traders will probably focus on win rate. And if you have a below 50% win rate, they're thinking, okay, this strategy is a load of rubbish. I'm not going to be able to be profitable. I'm not going to make any money. So they change to a new strategy. Personally, risk to reward is the most important thing in trading. You could have a 10% win rate and still be profitable. However, psychologically, the lower the win rate, the harder it is to enter trades. And hear me out on this one. If you have obviously that 10% win rate, out of 100 trades, you're going to lose 90. Would you still be able to hold to the full target on those 10 winners to make enough profit to cover the losses? And that's what you've got to ask yourself. That's why if you have above 50% win rate and you have a decent risk to reward, let's say a 1 to 2, 1 to 3, 1 to 5, then it's just absolutely perfect. But there are obviously, based on stats, you can be profitable with a 1% win rate. If that one trade that you actually win is a 1 to 100 or 1 to however much, all your SMC traders, then you can be profitable from that, obviously, based on the stats. So I'd say overall, risk to reward is the most important, but obviously you're going to want to be mindful of both. How did you upgrade your lifestyle after becoming profitable outside of trading? And I wouldn't really say I've upgraded my lifestyle at all. I haven't really bought anything expensive apart from the Rolex. It's not going to focus, but the Rolex. Obviously, when you're early on making a decent amount of money, I'd say when you're making over 10 grand a month, that's when your life will kind of, you could say change, but it becomes a lot easier. So when I actually started making over 10 grand a month, I think I was 17 at the time. And, it was quite crazy because the year before I was still in college and then I dropped out. I might make a full video on the whole progression into where I am now. The more you inflate your lifestyle, the more you have to make, because for the first few years anyway, this is my opinion, the more money you invest early, the younger you can retire, the more time in the future you'll have to then live your life. People always say, to me as well, why would you want to work so much when you're young and then not enjoy your life until you're older? Well, I'm only 19. Technically, these are the best years to actually work hard. You don't have any commitments. For a lot of you young people out there, you won't have any commitments. You don't have children. You don't have families to support. You don't have big bills to pay each month. You don't have any of this. Why would you spend your time going out doing all these activities when you could be working on your business? Because if you work on your business, then in a couple years' time, you'll have enough money to do whatever you want in life. You have enough freedom to do whatever you want in life. Myself personally now, I could live that trader lifestyle, sat at a beach trading with a $400,000 account, making 10%, 40 grand a month. But why would I want to do that when I can make so much more money just spending a few more hours and saving my money for the future, and then you can enjoy your life. You know, I'm 20 next year, so we're getting old, and that's when you can kind of start to, you know, enjoy your life. When you've made the millions, then you can go and do whatever you want. But when you're young, in my opinion, it's the best time to actually get all the work done, and then you can go and live your life. And people that go to like uni and stuff, this is kind of why I'd say it's kind of the best time to, if you have the opportunity and if you have like the resources to just grow a business when you're young. Firstly, you have all the experience. Once you've grown a business and you've made it successful, I believe that if you go bankrupt, you lose everything, that you could do it again successfully. So I felt like if I then went to zero and I had no money left, I feel like I could get back to the stage I'm at now, starting from zero, because you have that experience. And obviously, the younger you are, the easier you actually pick up things. So if you're starting a business and putting all the work in when you're older, you have the children, you have the responsibilities, so much more added pressure on yourself. So that's why I kind of focus now, put in the work in, 2-3 years time, move out, move countries, nice villa, pool, Will Jr., you know, and then pretty much just, you know, live the life. Couple million in the trading account, take 1 or 2 trades a month, and then you're done. That's just my opinion on how I'm going to structure it. But, you know, anything can change. I didn't think 2 years ago that I'd be making this much money. So, you know, you kind of just got to go by what happens. But that's just what I think about that one. If you hadn't started trading, what else would you have done? There's a few different options for this one, because I was actually doing videography, you know, not at college or anything, but just like myself. And obviously it kind of helps with the videos and everything when I started editing and all of that, before I got an editor. So that's probably what I would have done. I don't know, always been interested in business and, you know, that sort of aspect of it, growing your own business and all that sort of stuff. So it probably would have been something else, but just not Forex related. So I'm quite glad I actually got into Forex, because, you know, it's quite enjoyable having a job where a successful day is you've made money. So I guess any job is you work for money, but technically our job is to make money, which is quite cool. So I don't know, probably something to do with videography or something like that. How hard is it really to become consistently profitable? No signals, no EA, just me. And I'm not going to sit here and say it's easy, because it's absolutely not. Over time, you will start to improve. If you're backtesting, if you're journaling, if you're reviewing, you know, your previous week, your previous day's trading, this is where you can make the improvements. If you're not doing this and you expect to make improvements still, then you need a reality check, because you're not going to improve if you're not learning from your mistakes. And it obviously is very, very hard. You know, everyone's seen the stats. 90% of traders lose 90% of their money in the first 90 days. And this is obviously including people that just try trading, don't really like it, call it a scam, that sort of thing, after like a couple of weeks, couple of days of losing their money. But I do think if you get past the barrier of that get rich quick scheme sort of mindset, then you can actually start making decent money. And the good thing about Forex is it's very easily scalable. 1 year you could be trading a 10k account, the next year you could be trading $200, $300, $400,000 in a trading account. And that 10%, which used to be $1,000, is now $40,000. Just from using prop firms, scaling your personal alongside that. And this is how you can grow some very large capital from your trading. Will you do a rough breakdown of your strategy soon from all time frames? No. The only place I actually share my strategy is in my mentorship group. There is a link in the description. You know, YouTube is more for entertainment. That's kind of the point of YouTube, as it is all free. And I don't think that any traders should really show anything for free on YouTube, because let's say you're a trader that spent thousands on courses. You spent months and months, years of putting in the work to develop your own personal strategy. Why would you want to then give that out for free? It just doesn't really make sense to me. And I know People then say, well, if you're a trader and you sell a course, why are you doing it? Why wouldn't you give it away for free if you're making enough money already? And if you're a trader, you're probably quite knowledgeable into, you know, business, income sources, and that sort of thing. So you've got to realize that another source of income then benefits your trading. Myself personally, I trade better under less pressure. I'm pretty sure everyone is exactly the same. So if you don't have that pressure of making a certain amount per month, because maybe your passive income, maybe you have properties, they pay your normal expenses, then you don't have that external pressure of making a certain amount, you know, a set amount of profit each month. And then that can, you know, go back onto your trading, improve the results. You don't have to make a certain amount. You don't have to force the trades. You don't have to up your risk to make that monthly amount. And then you can, you know, slowly improve from that. How many income sources do you have? And I'll probably need to make an updated video on this, but I'd say it is quite tricky, but 6 or 7 maybe. I mean, there's certain things which you could count as one source of income. You could also count it as 2 sources of income. You know, my personal trading account, and then you have funded accounts. Technically, that's 2 sources of income, but then they both kind of fall under that trading title. So it kind of depends what you actually count as income sources, because yeah, but I'd say 6 or 7. I haven't really counted recently, but I did do a video like last year on my income sources. So if you want to check that out, go and check that out on the channel. But we're going to go on to the last question now. What's your advice on missing entries and stop loss placement? And this is quite a simple answer actually. If you're missing your entries, look back at the charts. Myself personally, I've had around 3 to 4 gold trades within a space of 2 weeks or so miss my entries by like a matter of pips, or some cases less than a pip, and it is quite painful. But what I've actually done, when you have your trading setup, you have your trading journal, every day you can review that. Okay, why did I miss my entry? You go back on the charts, go in detail. Did I follow the plan perfectly? If not, would I have caught the entry if I did follow the plan? But let's say you did follow the plan. How could I have caught this entry? If it was totally, you know, out of the picture for your strategy that you could pretty much couldn't have caught that entry, move on. You're not going to catch every move. But I'd say self-reflection onto the trades that you've actually taken previously is the best way to actually improve, because you've got all the data for yourself. You've got the chart screenshots. You kind of know, okay, I enter here usually, but this time I went for an entry here. Maybe you went for a better risk to reward. You lowered your stop loss. Sometimes it might work. Sometimes it might not. You might then not get tagged in. You might get stopped out too early. And these are things you kind of notice from the journaling which you'll actually do in your trading journey. So hope you guys did enjoy this little Q&A video. If you did, like and subscribe. Follow all my social medias in the description. I'll catch you guys in the next video.